All right, hey everybody, thanks for joining. It's Dalton Elliott with Lima One Capital. I'm joined today by a very special, very new guest. I have Nate Trunfio. He is the Senior Director of Sales and Marketing. Nate, thanks for joining.
Of course, my new best friend.
There we go. There we go. We keep you at an arm's length, though. Nate is up in the Philly area, and we'll jump into that a little bit later. So, Nate, how long have you been? It's been a few weeks since you touched down at the mothership.
Yeah, so I'm going on a month/a year, it feels like, here at Lima. No, but about 30 days, and it couldn't have been better. I'm still in honeymoon phase for sure. So hopefully you'll hear a lot of the energy and passion exude through me about working here at Lima.
Yeah, I'm curious. I've been here about 5.5 years, so I'm curious. A month in, what are your true first impressions? Just between you and me, I'll keep it a secret.
So should I butter you up first and talk about you, or no? I'm just kidding.
Great.
Look, it's been awesome. Just like starting any job in most places, like they always give the analogy of your head spinning around and you're drinking from a fire hose. And certainly I've experienced that very candidly, but I wouldn't want anything different, just personally. And so, there's so much action. There's so much passion here at Lima One. That's what makes me feel at home because I'm a man of passion and purpose, and I see a lot of that here throughout the company in so many different business units, and among the ranks, if you will. So it's been just great. Challenge. Everything's a challenge. We're a well-oiled machine, and we're always continuously looking to improve. And that's another principle that I personally live by is continuous and never-ending improvement. And it's just really a breath of fresh air to see that throughout all the people that I've been able to get to know and work with thus far.
Yeah, I really think our culture is second to none. The people here are absolutely incredible. And as you know, we just wrapped kind of the first of many client surveys that we're doing. Right? We had all of our executive team and senior leadership call on a random sampling of clients. And the biggest theme that was consistent throughout was the people, right? It was just positive comments about, Christian and inside sales and Seth on the servicing side, like people all over the board. Everybody's excited about the Lima One people. So we have a great group of people. I'm super thrilled that you are aboard now under the Lima One banner. Talking a little more about that. So Senior Director of Sales and Marketing, give us a rundown of what that is. What are your responsibilities here? What's your mandate?
So I'm too new to make a joke about my title, but I'm sure I'll get there eventually. Essentially, the way I see it is just to contribute and provide impact throughout the company. But specifically, it's growing our outside sales team. Part of that ties into culture a little bit because that's one of the reasons why I'm here is how strong and positive, and that just continuously learning and improving mentality that's engraved throughout culture and helping bring that to our outside sales reps. So our business development team is spread out as far as the West Coast all the way through the East Coast. And so looking at helping everybody improve personally, production-wise, certainly big focus right now is bringing on more people. Salesmen and women to join the team. We provide our salespeople with a ton of tools to go out and originate a bunch of business to really great investors. And we know we need to be boots in the ground throughout the country. So that's my main purpose. The marketing part of it is just throwing my hat at the ring with a lot of other talented people who help drive the marketing initiatives. And then what's been really exciting too is nobody seems to really care about a title here. Which is what I love. If you have the right passion and knowledge and expertise, everybody's willing to listen. There's another thing that really impressed me coming aboard to Lima One was how much the, so-called executives or senior leaders are in the know of everything on the front lines, and how much they actually, really care to identify and understand what everybody's experiencing, how they see the culture, the good stuff that we're doing, certainly, in the areas of improvement. So being involved in just huge company initiatives so early has been a blessing, and just really appreciative that people allow my loud mouth to open and give some good feedback. But things like product development, just processes improvements, and just being a part of the culture, man. And again, I feel at home. And I'm just excited to continue to help move the needle here as we continue our climb and quest to be the number one. We're right behind number one, I think, right now, but we will be the number one, especially now that I get to see the inside and under the hood of all the great people that are helping drive that bus.
Sure. One thing you mentioned that I want to dig a little deeper into is, you're growing our business development team, which, like you said, business development reps scattered across the country, as close to us as Atlanta, which is 2.5 hours away, all the way to the West Coast in California. I myself have kind of onboarded and led folks in Greenville, right? I have not had folks 2,000 miles away. Can you talk a little bit about the nuances and the extra hurdles that I imagine there are whenever you have such a big physical distance between you and a team the vast majority of the year?
Man, I love this topic, and you might have to pump the brakes on me because I could go for quite a long time on it. I also have a good amount of experience leading remote teams. And then let's be real. I mean, all of us throughout the country, especially companies even that, never had to deal with this remote-based environment, are dealing with it now as a result of COVID. So a couple of just key principles from my end that I'm big on is communication, right? That's an obvious one. But the little things add up when you're remote. So responsiveness, whether it's email, text, or phone call, you can, when you're in an in-office environment and you miss a phone call from somebody inter-office, you're going to run into them in the hall, lunch break, what have you, and you can, catch up with them. When you're on the outside and you have a lot of remote-based people, if you don't return a phone call, it sends a message. And the main message that always gets misinterpreted is the one that's not said. So even as little of, hey, I'm busy, I'll call you, even if it's tomorrow, the little bits of communication really add up over time. So I take a lot of pride personally in being very responsive, acknowledging things more so, whereas in the inside side, you can run by somebody's office or walk by their cube and give them a pat on the back and say, that was a great email, great idea. But when you're remote, you got to make sure you convey that through the different means. The other thing is, what we're doing now is video. So I'm a big Zoom guy. I love that we're a Zoom company. What I've implemented early on here is right now it's only 2 times a week, but it's a 1-hour block where I open up for my team specifically to come in and have any conversation. It could be a deal, it could be a constraint, it could be a training topic. I'm sitting there on camera. My wife actually walked by my home office the other day and said, why are you just staring at yourself? And I'm just sitting in an open room. But being there for communication and exposure and visibility, there's times where you can't be on camera in a specific meeting. But I would say my hit rate at any meeting that I've been on in Lima One is probably 99%, because it's important, especially early on as you're building a rapport. So just some little tidbits there, but the main thing is constant and consistent communication, and then being open and trying to embody the interpersonal relationships as much as you can while not being interpersonal, which again, the video helps with that a lot.
Yeah, definitely sage advice. Like you noted, you don't have to be a couple thousand miles away. There are still tons of folks that haven't seen the inside of their office in many, 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 many months. So that remote leadership piece is something that, good lessons to be learned there.
I will real quick, just to give a book plug, a really good book that I read early on in COVID. It was called The Long Distance Leader. And it relates to a lot of great best practices, tips, and tricks. So for those avid readers out there, The Long Distance Reader is a great book that helps give some good feedback on how to manage remote-based teams and virtual.
Cool. Switching gears a little bit, I happen to know you're a real estate investor yourself. So you're on the lending side and you're on the investor side. So if you could do me a favor and put on the investor baseball cap, just talk a little bit about, I guess I want to get into the broader piece in a minute, but talk a little bit about what you're seeing as an investor, you and your investor friends. What's going on, boots on the ground?
Sure. Yeah, man. I mean, look, my personal investor experience is not much to shake a stick at or to tout by any means. Most of our borrowers are more qualified than me, but I'm usually have a deal or two in hand. Whether it's the fix and flip, which is predominantly what I'm doing, or a fix to rent. Can speak from experience. The other thing that's important, I think, from a lending perspective, especially for our clients to know, throughout Lima, there's a lot of real estate investors on the executive team. We're in such a world of using common sense that it's good to know that there's people at Lima making decisions, even on the credit side, that also have that firsthand experience. Because the last thing you want is like, always paint the picture of a stuffy banker telling a real estate investor how to do things, because there's so much going on. There's so many variables. And it's not all wins. I can personally speak that one of my flips through COVID, I had to go through firing a contractor, which meant I hired the wrong contractor, and dealing with all of that. When you're able to be on that side of the coin, you can relate a lot better, and then also provide solutions to investors. But as far as what I'm seeing, it's very much no different than what everybody knows and reads. Is inventory is really tight. It is hard to find good deals. I mean, my so-called look to offer ratio is super low right now, because there's just not much good inventory out there. And, from what I know personally, being a very small time investor, if you don't have the right systems and processes put in place, especially on the marketing side and the acquisition side, it's really tough sledding out there right now. So I'm in the Philly suburb market, which is very competitive for sure. Very low inventory levels. And so I'm seeing a lot of what you see throughout the country. And by no means do I have enough time, especially for any my manager listening to the call. I'm spending all my time on Lima, none on the other stuff. But with all the time I spend on this, I don't have enough capacity to really get to the ability of really executing on a lot of deals right now, which is fine by me. But at the same time, I'm an action guy, so I love doing deals, lending wise or actively in real estate.
Yeah. So kicking back to lending, you talked a little bit about it. We lend across the board. We do new construction, multifamily. We do single asset and portfolio rental. We do your heavy rehab, your light rehab, everything in between. Do you kind of want to just pick away at each of those just as investment strategies and give your 2 cents?
Sure. Yeah, absolutely. And again, it's not to keep touting it, but it's just cool to be here at Lima, where I feel at home, because I take a lot of pride in knowing what our investor clients go through and are going through and are looking at. So I study a lot of the different investment strategies. And again, I'm at home because so many of our coworkers and peers do the same. So we'll start with the fun ones. Fix and flip and rental is, that's the mainstay. We can briefly talk on that, but let's start maybe with new construction. Sound good?
Right.
So for those that don't know, new construction was our most recently re-rolled out product, phenomenal product. And there's just such a void for it. From a fundamental standpoint, I'm a huge believer in new construction. For those of you that do flips, if you say that your cost variance or your expected scope of work budget had a variance from, if you do a lot of these, a variance of less than 10% on your budget, you're probably lying. I personally know firsthand. I think I'm pretty darn detailed and diligent. The budgets can get blown up pretty easily. So on a fix and flip, when you're dealing with an existing asset, there's so much unknown and uncontrollable. New construction, you can control so much more. Your average builder is dealing with cost variances of 1% to 2%, maybe more in COVID with some of the stuff going on the supply chain and material side. But it can be, when you build the right systems and processes, very scalable and predictable. Not to mention the economic fundamentals that are behind it. So there is so much demand right now for new construction homes. There's a huge gap, even I think the largest in history, where new home sales are actually outpacing the starts, which is, again, just speaks to the amount of demand that's out there. So there's a lot of opportunity, and especially in the affordable build space, which is a place that we very much finance well. I think the challenges with that space is what's the result of COVID. There's a shortage in labor because of all the construction demands. And then supply chain, like I said, with materials is really difficult right now. Personally, on a flip, trying to get matching appliances, like the leeway time is way too long for me. So I got to get mismatching appliances. But that just goes to show, in my little example, how delayed material is, and then as well as things of lumber and other items becoming much more expensive is a little bit problematic. But we'll continue to get back there as manufacturers across the world get back online. And realistically, I just think there's so much opportunity in new construction. We're seeing a lot of people that are buying infill lots, especially a lot of the lots that were left over from the last crash with developers that failed. A lot of that inventory is getting eaten up now, so it's even harder to find that. But new product on the market right now sticks out so well, and you can get great returns on building to sell. That it's awesome, and you can certainly fine tune your model enough if you get the right cost points and the right general contractors, or you self build to do a build to rent model, which is again, huge believer in both those strategies. And there's so much opportunity in the realm of new construction. It's hopefully you can hear some of the excitement for my end because there's just a lot going on, and certainly on our lending pipeline, it's becoming a bigger piece of the pie, which also proves the point of the amount of demand for new construction out there.
Yeah, new construction was definitely the biggest pent up demand piece when we went into program relaunch. And I think at 85% of lot and 100% of build cost, it doesn't get better than that. So we got a pretty darn good product out there.
Well, here's the thing. Another just a quick important note for builders or investors that might tune in. Most banks, and especially on the institutional side, don't understand, nor do they want to deal with construction because there's a lot more on what you call like the asset management or the servicing side related to overseeing those projects, number one. Number two, there's not really a market for a half-built home. So if a project goes awry, and the lender has to take the property back, you're not really getting, you get to sell the property and liquidate it at such a discount. So there's a lot more risk to the credit of Wall Street, but at the same time, large institutional banks just don't want to finance it. And that's why a lot of our competitors haven't been able to bring back this product, because their institutional backers don't have an appetite to it. And then big shout out to our executive capital markets team for really working hard to roll our product back out. But the bottom line is that there's such a disservice to builders out there. And there's such a huge void, especially for people that are building spec and certainly building a spec on infill lots. And that's where we fill that void as much as we can. But it's tough getting money for builders. So it's good to be able to service them here.
For sure. You mentioned multifamily too, right? We occupy a pretty beautiful niche in the multifamily space where we do small balance bridge lending, whether it's rehab or a stabilization play. What are you seeing in here and on the multifamily side?
Yeah, so I love my multi. Look, start very high level. I'll try and move through briefly, but there was so much unknown about all the commercial asset classes through COVID. And we've gone through a lot of it. Initially it was what the heck's going to happen? What's going to happen to the tenant base? How will it affect transactions on a moving forward basis? And quite honestly, a lot of transactions fell through, never transacted. So there's a lot of those properties that were previously for sale that, owners were in tricky situations. So I bring it back to market now or not? And even looking forward, there's still a lot of unknowns. It's hard for people to underwrite what future rents will be. I mean, the last number of years, you could easily plug in 3% rent increase year over year in a model. And it spoke really well to underwriting bridge deals. It's hard to predict that now. How are collections going to continue to hold up? They've probably held up better than what we would have expected initially when we got hit with COVID. But they've been, for the most part, in Class A and B in the low 90s. So there's still a lot of unknown out there. What's going to continue to happen with unemployment? But the bottom line is commercial multifamily of commercial assets is one of the best asset classes to be invested in. And a lot of that speaks from a macro basis to how much renter demand there is, and also the flight from home ownership to rentership. throughout all the age brackets as well, or a lot of the age brackets, I should say. So it is a great place to be. A huge believer in it. I would still say you can definitely describe multifamily investment landscape with the F word. It's not the one you're thinking of, Dalton, but I like to use the word frothy. It's still crazy, the pricing that's out there. People are still buying at low cap rates and selling at low cap rates. But what's really interesting to see, I just read a study last week that showed the dichotomy between buyers' opinions of what they should be able to buy for and sellers' opinions of what they think they should sell for. They say the gap is larger than it's ever been. All buyers think they should get a discount because of all the COVID and the unknown. And all sellers say, hey, it's a great, this is still a great investment. So I shouldn't have to give a discount. That, among other factors, have led to a lot of low transaction volume. There's just not been much action in multi as we're used to. And a lot of the trends show that. We're seeing some increased action. And the last thing I'll say on multi, and this isn't because of where our product fits, but where I'm seeing personally, because I'm on a number of just like multi lists from some great investment sales brokers on the smaller multi side. So whether that's the sub 20 unit or the 20 to 50 unit, or some people will call sub 100 small multi, a lot of people will. But you're seeing a lot more of that come online in trade rather than the larger multifamily assets. My personal analysis on why is because a lot of business owners, which unfortunately business owners have been hit really hard through the economy, in the shutdown and the stay-in provisions, they would buy smaller multifamily properties to add to their total investing portfolio, not just real estate. And it's easier to buy smaller and manage it and have it, give you good returns rather than 100, 200 unit properties. So with businesses and self-employed people, struggling a little bit, we see a lot of those properties getting unloaded and providing good opportunities for investors buying smaller multifamily units. That financing world is really tough to get on the permanent side still right now. And in all of multifamily lending, it's a different landscape. You're not getting the same leverage that people are used to getting, and it's being underwritten a little bit differently, especially for value add. But we fill a huge void in being able to fund multi-unit to multifamily $250,000 plus transactions, which that $250 to $1 million is tough to get in other places right now. Besides Lima One, your local banks are about the best bet. But all the other more conduit-based, Wall Street-backed, sort of small balance multifamily financing is either still on the sidelines or it's just the product's very far from what it used to be. So I'm still super bullish in multifamily, as most people are. And I think we got a great product to service, especially on the small balance side of things.
Yeah. Keeping sort of the same flavor, I want to talk a little bit about Rental 30 and Rental 30 Premier and just kind of the macro landscape of single family rentals as a whole. Whenever we relaunched products over the summer, rental just shot off like a rocket. And I have to look back, but I'm almost certain that our lowest rental rate right now is significantly lower than what it had ever been in our company's history since we launched that product. So you have crazy low rates out there. Leverage is almost where it was pre-COVID. What's not to love about it?
I mean, again, from a fundamental standpoint, the demand for, from tenants and rentership is so high. And you're going to continue to see it increase, in my opinion, for a number of reasons. People moving and the lack of inventory, number one, but then all the unfortunate distress throughout the economy. People can't buy homes anymore, and they're not able to have as much discretionary income that builds up to then be savings to put a down payment to buy a home. And then you see the older demographic want to rent more. So like you said, the product that we've worked hard, and even all of institutional Wall Street's worked hard to bring the product close to where it's been pre-COVID. So to be able to get back to 75% cash out on our rental loans on both a single asset and a portfolio is huge, because the other problem was the fixed to rent model. The BRRRR. BRRRR was really tough to do when you could only get 70% financing. Now we're back up to 75. So that allows people to either recoup all their cash that they invested into their initial, renovation loan and flip potential, or pull more money than they put in out of it. So it's great to see the product come back. It's great to see rates get more aggressive. But from the Wall Street side, where our rental loan, the Rental 30 and Rental Premier fit in Wall Street's bucket, we're not in high enough classified sort of bonds for them to really go really aggressively at bringing it back. So it's taken time. We appreciate all the clients that have been patient through this to get the terms that make sense for their investment strategies. But just know that, the rental product was lower on the totem pole for Wall Street. And so again, big shout out to the cap markets team at Lima One, because we've been working hard to get the product to where it is. And we're very confident that it can meet the demands, that investors have, and more importantly, allow for profitability, increase cash flow, and to grow your rental portfolio.
Yeah, and we're not finished refining, right? You mentioned the product development meetings that we have every few weeks. Our last one was yesterday, and a lot of stuff got signed off on, got put into a queue for kind of more diligence to come up with a firm proposal. We just made Rental 30 changes, new construction changes. So constantly honing the blade to make sure we have the best product out there.
Absolutely, man. Love
All right, strap in, Nate. Buckle up. I got some questions for you, amigo.
Let's go, buddy.
All right, a couple quirky questions here, if you'll indulge me. It's one of my favorite things to do on the old webinars. So, number one, if you had to eat one meal every day for the rest of your life, what would it be?
It's an easy one. Pizza.
Really?
Done. Pizza.
Justin said the same thing, our director of inside sales. My question, so I absolutely love pizza. I ate far too much of it in college, and which is why I try to stay away from it now, just because I have zero. I'm like, oh, I'll get a pie. I'll have 2 pieces, and then I'll be done. I'm like, oh, God, we ate the whole thing. What's the strategy? I'm at a loss of words. What's the strategy for eating pizza every day and not killing over? Is this a sustainable strategy, I guess, is the question.
I don't know that, but I can say I eat my fair share of it. The one other thing I always say, make a joke that one of my favorite meals or foods is leftovers. Yeah. So that's what gets me, man, is the leftover pizza, whether cold or hot. Without going to the normal health of activity and I don't think I'm going to have a good answer for you, man. I'm not giving up on pizza regardless of what it does to me.
Fair enough. The Epicurean mindset, do what feels good. I can buy into it.
Hey, look, on when I'm virtual on Zoom, you only see the bottom half anyway, so I get some room to build out down below.
There you go. Just tilt the screen. What would they make the title of your biography? What's on the front of the cover there?
Oh, man. I would have to say, how can I always make things better, or how can I make things better? The reason for that is read a good amount of Tony Robbins, and a lot of what he'll say is like everybody, and a lot of people say this, have an inner question that they're sort of always asking themselves. And that's always been mine. How can I make things better? So that comes to my interactions with people. How can I make, somebody's skills better or improve, get to where they want to be, accomplish their goals? How can I make a process better? How can I make myself better is the most, frequently asked question. So that would be the title of my book, my biography.
I like it.
Not autobiography, because I'm not writing that myself.
Yeah, I think I like it. I think the wandering and always unsatisfied mind would be mine. Just constantly all over the place, for better or worse. I think that would be it.
Like yours is so much more creative and better, but I was on the spot, and you've had time to think about that, man. But that's a phenomenal title, dude.
I did very well in English classes.
I've already learned a bunch of words just being in meetings with you. I Google them just so you know.
No. All right. If you could snap your fingers and live anywhere in the world, where would it be?
I'm going to give you a really salesperson answer to that and not specifically answer the question. It would always be a different place,
Yeah.
honestly. So like I'm big on self-development and self-analysis.
Uh-huh.
So for anybody that knows like a disc profile, I'm a pretty low S, like low stability. So I like change. I embrace change. And so, if I were to pick one today, oh man, I got to go back to my home roots up in New England somewhere because it's fall and the foliage. But you put me in the winter, I could go either way to somewhere where I want to go skiing or somewhere to get a lot warmer. But I'm one that like that answer would probably never be consistent. So I'm going to give it the always different places answer.
I love that answer. That's probably the best answer you could give, in my opinion. COVID has been tough on my wife and I because travel is an integral part of us. It's like one of our favorite things. It's just go see different places. I've been to 17 or 18 different countries, and I'm just love going new places. Our most recent favorite place to visit internationally is Cartagena, Colombia. And we came upon it. We were talking one night. We both had been through a good bit of Europe, and we're like, hey, we've never been to South America. Let's go to South America, but I don't really know anywhere in South America. So we Googled South America, hit images, and then we scrolled down 3 or 4 lines and we said, this looks gorgeous. And the next night we had flights booked to Cartagena. So
that is awesome.
I love the bounce around.
It's sort of like when you were little kids and you had a globe and it's like, where are you going to live when you grow up, and spin the globe and put the finger down. And that's so cool that you actually like followed through on that. I was raised sort of focusing on experience, and traveling ties right into that. So to me, it's so important just to experience other people, other cultures, other places, the beauty of nature. So I'm an avid traveler. It's been, I'm at least fortunate that through COVID, the only place I've been able to travel is to see you in Greenville, South Carolina. So at least I got to travel there.
Warms my heart. So one last quirky question. If 500 million shows up in your brokerage account today, say you played the options game with Papa Musk appropriately and you made $500 million, what is the first big ticket item that you would buy for yourself?
Oh man. So 2-part answer. So the first is like, I'm not very materialistic. So for me to come up with something specific, there's nothing that like sticks out to me. It's not like a flashy car or anything like that. Yeah. What I would say though, if you force me to buy something tangible, and this probably is cliche, but it would be real estate in the multifamily realm. So that's where I would be looking first. But I'm going to piggyback off my last sort of comment of I'd probably like the first real thing that I would buy of substance would be a trip, would be an experience, would be going somewhere. Who knows? Maybe I'd even take you. But but that would be it. Is real estate, most likely multifamily, and I would probably, before I got to pulling the trigger on a deal, be traveling somewhere.
Such an adult, Nate. I love it. It's great. But I will say I'm a big believer in the idea that like I've never spent bad money on an experience, right? True. Like that's just, and same thing with food, eating out with friends and stuff. Like as long as there's good company, like it can be bad food, but which is extremely rare. There's one particular Vegas spot that a bad food experience that sticks in my mind, but we won't give Wolfgang Puck too bad of a hammer this time. But yeah, I love it.
I mean, look, I'm good experience or bad experience, whether it's money, however much money is tied to it, my mentality is you learn from it all, you grow from it all. And those memories, for good or bad, are never going to leave you. And sometimes the best stories to tell, and the ones that you chuckle the most at, are the ones where in the heat of the moment, like it was the worst experience you were ever going through, and the world was about to end. But to me, those are all, whether it's like notches on the belt or experiences that will make you a better person, as long as you persevered through them and you have the right attitude about it. That's always been my approach. And again, it's just been awesome to be able to collaborate and be around like-minded people that are very forward-thinking here at Lima One, just like yourself, my man.
I love it. Next time you're in town, we gotta find a nice establishment, get into some drinks, and swap some experience stories.
You know it. You know I'm always down.
Cool, man. Well, thanks so much for joining. Any parting words to the old Lima One audience?
Nothing too specific. Outside of all the great things that you hear, I've seen. I'm excited to add my part to our culture. And to see this company continue to grow. We've had a ton of successes, and there are a lot more to come. And there's a lot of great things to look to be around Lima One about, not just because of the financing that we can provide, but because of the people. And so I'm just super grateful for this opportunity, and that's what I would have to leave with.
Nate, thanks so much. It was a real pleasure getting some market insight and really just learning more about you.
Thank you. Appreciate it, Dalton.